So the first step to mortgage success is going direct to Rightmove and placing an offer, isn't it? Hi, my name's Alex Kerr. I'm a qualified mortgage broker and my passion is simplifying the mortgage process for first-time buyers. Let's get into the vid. 5 key rules to mortgage success when buying a house, and no, this isn't going to Rightmove and placing offers. Key rule number 1 is always the same. Check your credit file data on Experian, Equifax and Transunion. If you have followed me for a while, you will likely know the reason why. For any new listeners, this is because mortgage lenders could use any one of these 3 credit agencies to assess your credit data. Therefore, you need to know what's going on all 3 credit agencies. So how do you do that? Just download a multi-agency credit file. Checkmyfile, to the best of my knowledge, are the only provider who provides all 3 credit agencies in one report, thus saving you time, hassle and money of downloading them all individually. I put the link in the corner of the screen now and at the top of the description below. You can download your credit file for free, cancel at any time within the first 30 days, and it's £14.99 thereafter. Once you are logged in, just go to the bottom of the screen and click Download Printable Report. This will enable you to save your credit file as a PDF. It's also worth noting, if you would like a free chat to go through your mortgage options and assess your credit file, just click a free chat with us by using the link in the corner of the screen or the description below. Key rule number 2. Once you've checked your credit file and see you have good credit history across all 3 credit agencies, the next step would be to go and see a mortgage advisor. You could go to your own bank and discuss the products they have, or go to a mortgage broker and discuss the products available from a number of banks and building societies. This will provide you with your affordability so you can determine a suitable purchase price of a property, which combines the mortgage amount you can borrow plus your deposit. You will need a minimum of a 5% deposit to buy a property. If you are happy with the quote provided to you, the next step would be to obtain an agreement in principle. This would show you are mortgage material and would allow you to prove to the estate agents you are mortgage ready with an agreement in principle certificate. Key rule number 3 is to register with all the property portals and set alerts so you do not miss out on new properties. It's also a really good idea to call the estate agents that are in the areas you are looking to buy and ask them if they have just taken on any new properties which are not yet on the property portals, so you can look to view them immediately. This will put you one step ahead of everyone else and give you an opportunity to make an impression. What do I mean by that? Is when you are viewing the property, make sure that you build a rapport with the estate agents and sellers if they are present, and to be complimentary of the property. Remember, people buy people. Try and find out why the sellers are selling the property and what the key element of the sale is to them. And if you put in an offer, try and satisfy the key element of the sale. For example, if they have some type of time constraint, consider giving them an extra week to vacate the property even after the completion has gone through. Whatever it takes to make sure you have your offer accepted. If they require speed, for example, highlight the fact you're a first-time buyer and can complete very quickly. It's not always all about placing the highest offer. Unfortunately, sellers only have money in their eyes, and it's our job to show that that's not always the best option. On the subject of placing offers, in a lot of cases you are going to face stiff competition. Here are some ideas which could help you stand out. Create a video of your offer and highlight the reason why you love the property, and ask the agents to forward this on to the seller. As discussed earlier, if you are complimentary about the property and build a good rapport with the agent and seller, the video will remind the seller of your viewing, and this could increase your chances of success. If you can help the seller in regards to the key element of the sale you found out earlier, then make sure you mention this in the video as well. If you're going over the asking price, I wouldn't consider going above 5% of the purchase price. The property would very likely be downvalued and be wasting your time and everyone else's time. If you have the extra funds and are not reliant purely on the mortgage funds, then this is your choice. I would also point out in your video offer, on the basis you are going above the purchase price, assuming this is no more than 5%, that you believe your offer is the maximum possible before the risk of a down valuation occurs. And that, should anyone else go above your offer, this could lead to a lot of time wasted in your part, as you would need to remarket the property and go through the whole process again, whereas your offer is designed to avoid this headache. If you do have extra funds available in this case, or even if you are going more than 5% of the purchase price, then also point this out, and that it would be very unlikely that another seller would have the extra funds available. If you don't have the extra funds available, then obviously don't add this bit in. Key rule number 4, make sure you are ready to instruct your solicitors as soon as an offer is agreed. This is really important, as the estate agent will not take the property down from the market until you confirm your solicitor details to them. A common mistake for first-time buyers to make is just going and getting a solicitor quote, then later on realising they are not on the panel of the mortgage lender. Mortgage lenders have special panels of solicitors that are allowed to use them, and all lenders' panels are different. We use a portal for our own clients, which means we can type in the mortgage lender and obtain a quote filtered down to the solicitors that are on the panel of the mortgage lender we have input, therefore avoiding this common mistake. We've made this portal available where you can download a free solicitor quote. Just input your mortgage lender and it will show you quotes from specialist first-time buyer solicitors that will be on the panel of your chosen mortgage lender, therefore saving you this hassle. You can also instruct the solicitors from our portal. You will receive a client care pack from the solicitor you instruct within 24 hours, so you can move forwards with your instruction very quickly and have your searches started. It's also worth noting that by using our portal, which is via a company called Salt Refer, who have been running for many years, provide what is called a second search promise. So if your transaction through no fault of your own falls through and you instruct the same solicitors within 6 months, then your next set of searches will be completely free. This will save you around £300. There's plenty more benefits, all noted on our website. Just go to mortgagechain.co.uk, quote and solicitor quote for further details. Key rule number 5 is to make sure you do not take out any new credit during your mortgage application. And this is up until the point you get your keys. If your car breaks down and you need a new one, find another solution, because that could be the difference in your mortgage going through and not going through. A mortgage lender can do a credit search or credit score, update it at any time during a mortgage application, and if they find new credit, they might decline your mortgage or reduce your borrowing. If you find that you have repaid a lot of credit prior to your mortgage application within a month or two, when you are asked about credit commitments and you tell them that you do not have any, the system their side might not have updated and could reduce the amount you could borrow, which they will put down to undisclosed commitments, because it can take up to 12 weeks for your credit to update. So I would highlight the fact that you did have some credit commitments, provide the companies, loan types and balances before the moment they were paid off. The lender will then place them into their system, but highlight that these will be paid off before completion. By the time you get to completion, the credit file should have updated, and if not, the lender will likely put a condition in your mortgage offer that you evidence that these commitments were repaid. The solicitor will then ask you to show bank statements and statements from the credit providers showing the debt repaid, which of course you will have when you paid off previously. Right. That's the 5 key areas to think about when buying a house. If you find you've got some value from this video, please do consider subscribing. Really does help the channel get more exposure and help first-time buyers like yourself. We now have a brand new first-time buyer pack you can download, which has items like a documents download checklist, so you can check all of the documents you need for a mortgage. Also has a gifted deposit template in case you are receiving a gifted deposit. Various mortgage calculators for shared ownership and help to buy, as well as a first-time buyer guide for 2022 and beyond. Today's question: are you looking to buy a house this year? Let me know in the comments. Mortgage warning. Please note, we do need to let you know that your home may be repossessed if you do not keep up with repayments on your mortgage. So thanks for watching today's video. I hope it has provided you with some useful tips. Please do check out the show notes for a recap with access to any links discussed today. Please consider subscribing and ringing the bell to receive notification on our latest videos. I've been Alex Kerr, providing the best tools and tips to first-time buyers. I'll see you in the next one.